Did you know you can get a copy of the Edge Finder completely free with our sponsor, 8cap? 8cap is a super well-known brokerage that has been in the game of CFDs for a long time. And if you are interested in switching your brokerage to 8cap, they can actually purchase a copy of Edge Finder on your behalf, making it completely free for you. This is an offer our team has worked out to make the Edge Finder a completely free to access tool if you move over your account to 8cap. Here's how this works. It's pretty straightforward. If you head over to our website, a1trading.com/8cap, you can explore this offer in more details, including all the terms and conditions. But basically, the high level idea is if you create an account through that specific page and you meet the deposit requirements, 8cap will effectively buy a copy of Edge Finder for you. Now, please note this is unavailable to US traders, but for my friends outside the United States who trade CFDs and you like the brokerage 8cap after exploring it on this page that is linked below, then maybe you consider taking advantage of this offer. We've had a lot of people do this and it makes the Edge Finder completely free, which is a hard price to beat, by the way. It doesn't get much better than free. And it's a win-win-win. 8cap gets a new client, you get a great brokerage, as well as access to our software, as well as other stuff on that page. You can get access to free memberships with us, Stockbox, etc. at no cost to you. You just move over your trading to 8cap. So the full details and terms and conditions can be found on this landing page, again, linked in the live stream chat or in the description down below. Please also make sure to do your due diligence to make sure that 8cap is a good fit for your trading and meets all your criteria for what you're looking for in a brokerage. On this landing page, you can explore the different product offerings that you get access to from our store completely free if you deposit certain tiers within this list. And the cool thing about this multifaceted offer is that even if you have a lower capital basis, why not move your account over if you like the brokerage, you like what you see there, and get something for free out of it. I think this is a really cool offer that they've set up with us, and it is sort of a co-branded offer by 8cap sponsoring A1 Trading. So check them out. Again, all the information can be found on that landing page, a1trading.com/8cap, or found in the description or live stream chat below. Thanks to 8cap for sponsoring. Now back to the stream. Good morning, guys. Welcome back to another live stream. Hope you're doing well. We've got some interesting movement going on this morning as we do continue to see a fall down in the gold price. A little bit of headline news here this morning, some possible developments in regards to the Strait of Hormuz, and gold cannot catch a break here, it seems. And if you've been watching the channel, then you know we've been pretty bearish on gold. So this is kind of nice to finally see the break to the downside taking place around this 44.60 level. We'll see if it can get some follow through. I think if you're a seller here in gold, you're looking at this level here that we just broke and you're saying, okay, you know, is it for real? Are we going to actually be able to hold these gains to the downside? And I do think that for now, the path of least resistance is yes. Price action is continuing to sort of melt away here. We did come back up into this resistance point here around the 46.70 level and have pretty much seen nothing but selling. A brief bounce in the price of gold, which was met with selling pressure. And take a look at this candle. We like to see a candle like this because that kind of break to the downside where you flush straight through a level of support like that is a positive development sign when it comes to price action. So I'm going to actually switch over my level here on the 4-hour chart, marking it as a supply zone. So this is a very narrow pullback, but I'm very curious to see if you do get a bounce in the price of gold, if you see like, you know, in the next 1 hour, if price bounces or so, how do we, respond here? Do we get follow through from this 44.70 level? Or do we break back above? So we finally broke the consolidation. I would say path of least resistance for gold is to continue to move lower. We have some news that looks like the Strait of Hormuz stuff is making a positive development, and gold seems to just not be able to catch a break. Here's why. Gold has two problems right now. It has an inflation problem, rising inflation due to the Strait of Hormuz stuff causing oil prices to stay elevated. But simultaneously, if geopolitics are cooling off, that's also not a great thing for gold. So gold has a double whammy pain train right now. And sometimes you get markets into this funk. And this is where, for me personally, this is why I like trading with the trend and trying to follow the direction of the chart, follow the macro. Because right now, when we look at gold here, guys, Gold has a lot of reasons that it wants to keep moving lower and not a whole lot of reasons that it wants to move higher. Yes, you have oil prices moving lower. This is another, of course, I think you need to watch both charts simultaneously. Keep an eye, if you're trading gold, keep an eye on gold, keep an eye on oil, because I think these two things are important to watch together. But notice how we are seeing oil come down here in response to this. But one thing I just picked out off of the headlines that just hit the wire is that Iran is still going to, according to this latest draft of agreements, still be in control to some extent of tolling traffic through the Strait of Hormuz, which the market may not like still, and actually could be a bullish thing for oil. So again, we've said it on the channel. We'll continue to say it. I think we're looking to see if we can actually get more of a decisive break lower in oil, meaning back into the high 70s, low 80s. Before we can draw any sort of conclusion that we are in a downtrend. Because right now, if you're asking me, are we in an uptrend or downtrend on oil? Well, obviously in like the 4-hour chart, the 1-hour chart land, looks like we've got a little bit of a downtrend here. But if you're looking at the weekly time frame, it looks like we're just consolidating here at this kind of extreme level. So we're continuing to monitor that. The volatility index is down a little bit here this morning, down 1%. Dollar index also was just a little bit softer here this morning. But notice once again how, again, this is holding up very nicely right around this 99 level. So bulls are still at a support level here for dollar. So we'll see how that, if possible, if that can hold this week. And continue to sort of mark out a short-term bottom for dollar bulls. So we'll see. It is very interesting just watching the reaction. You would think maybe stocks would be popping more aggressively to the upside if we're going to have some sort of resolution, but perhaps the resolution that is being drafted is not super smiled upon by markets. By the way, real quick, as we get started, I'm going to be taking a look at a lot of charts here this morning. If you could drop a chart that you would like me to pull up and take a closer look at, please feel free to do that. Drop it in the comment section, and I will have a look at some of those here in just a moment. Another one is silver. Watch silver if you're watching precious metals. If you're watching gold, you should also keep an eye on silver, because silver, to its credit, has not broken the lower end of this 4-hour chart support zone. Like gold has, right? Gold has sort of already lost that 4-hour chart support. We'll see how things go as we retest this 74.50 level on silver, if we're going to catch a bounce here, or if we're going to start to lose the momentum here as well. Now, for me on gold, I actually really like gold as a possible sell to retest, and I'll map this out for you. Like, I like this idea. If you do continue to see a flush here on gold, right, this kind of break and retest actually looks really clean for a possible sell side continuation trade for me. So I am watching gold this morning. Got a couple people asking for NZD USD. Thank you very much for being here in the chat. Good morning to you. Good afternoon, wherever you are in the world. Can you look at pound Swiss? Yeah, so we'll take a look at a couple things here. So we'll just look at NZD USD. Like I said, drop your comments here on what you would like to see, and I'll try and get into that. NZD USD obviously moving a little bit higher here this morning. If I was to take a look at NZD USD specifically, let's see if we can pull up NZD. I'm going to be in the neutral camp currently on this particular currency pair. Edgefinder is tracking technicals, sentiment, economic growth metrics, inflation metrics, and jobs market metrics, and generally just giving a mixed reading for Kiwi dollar. If I am looking at specifically USD pairs, and I'll still comment on NZD, just give me a second. If I am looking at USD pairs, I am looking still at the pound dollar. I still have a short position on that one, so I'll talk about that in just a moment. But Kiwi dollar on the daily time frame seems to continue to be respecting this area of support. Again, I don't have a strong bias one way or the other. This looks like a really strong engulfing candle, so I wouldn't be surprised if we did see, Kiwi dollar kind of make its way back up to the top end of this range. What I think would be more worthwhile, more interesting, would be a break one way or the other between, let's actually mark our resistance level. I think you've got resistance up here at 59.60 or so. If I go resistance, we're daily chart here. right? So I think what gets more interesting for Kiwi dollar would be more of a decisive breakout one way or the other, but I don't particularly love this chart either direction right now. So just neutral for me. I mentioned I do like pound US dollar to the short side, and I am still short this currency pair already. So this trade has come back to break even again for me. It was in the red and has since kind of filled the gap that it left over the weekend. And now we're sitting back break even on the trade. And I do think we have downside for the British pound. If I take a look at our, let's look at our asset scorecard specifically for the British pound. So British pound is actually it's been recently getting a stronger bearish reading, but take a look at this. So if we are looking at economic growth for the UK has been a little soft. Institutional activity has been pretty bearish. We've seen institutions selling British pounds pretty aggressively according to the Commitment of Traders report. They also have a heavy short position on the Commitment of Traders data, so that is very telling. So you have big money that is still short. You have a seasonal downtrend. Technicals are showing some resiliency for the British pound, but I imagine that as you start to see this thing roll over, if this is going to start breaking back into more of a downtrend, Edgefinder will start to pick up on that and start to print more of a bearish read. So I think if you can see like a day or two of downside on British pound versus dollar, you are likely to see this thing go more into bear territory. Sentiment COT, I largely agree with this, right? COT data showing selling. So institutions are selling pound. Fundamentals are showing bearishness on the British pound as well. So yeah, very interesting stuff. GU doesn't like you, Nick. Yeah, it's challenging me, but overall we've done just fine. Actually, pound dollar has been one of my better Forex pairs this year. Just recently, it's decided to revolt against me a little bit here. But at the end of the day, it's 1 in 1,000 trades, right? SPX. So we are seeing with the stock market here, interesting little reaction this morning. I mean, here's the news, right? The news of we have a draft, but it seems like maybe markets don't love the draft, or it is the classic buy the rumor, sell the news moment. We could very well see that be taking place as well. Like you could get the situation in which the war ends and the market sells off. Would that surprise anyone in 2026? Man, it feels like 2026 is the year of fake outs, right? A lot of people thought that the breakout of war would be very bullish for gold. It was actually devastating to gold. A lot of people really took it on the chin here this year with gold. Like they had a tough year trading gold so far. And it's because, again, if you know your macro, I know it sounds like a know-it-all moment. I'm not trying to sound like a jerk or anything, but if you know your macro, like this was to an extent, I hate talking in hindsight, but there is some hindsight here, I understand, but you could largely have avoided a lot of the pain if you tracked the macro data here. I'm going to just show you this because I can say that, but let me actually back it up with something. So I'm going to go here within Edgefinder and we're going to look at gold's reading. And this is a new chart here, so I'm hoping this is going to work for me. Okay, so Edgefinder tracks macro fundamentals, right? It does so in a way that is automated. Like you pull up Edgefinder each day, Edgefinder is tracking what is going on within the macro. Generally speaking, it's looking at inflation, it's looking at jobs data, etc. Look at this chart. Look at this chart with me. It's like the meme, look at this photograph, right? Look at this photograph. Okay, so I'm looking at daily chart versus Edgefinder score. Look at this. During this period of time, we slammed the table talking about how the macro was positive for gold. We're looking at September all the way until January into March for gold. I know this is a little bit hard to see on the screen right now, but look at this. These green signals, those were times in Edgefinder's history where gold received a bullish reading, a score of 5 or greater. Do you see where I'm going with this? Edgefinder saved, if I was just going off of technical trends only, do you see how painful this would have been? Do you see where I'm going with this? In 2026, all the bullish readings evaporated on Edgefinder because the macro started to shift. Edgefinder's score reflected it and kept me personally, with my trading style, completely out of all of this pain that's gone on in gold. Do you understand what I'm saying? Like, I know it's we have something to sell you. It's a product that we sell, but like, you're looking at the back-tested example of gold and how Edgefinder has been very tuned into gold in the last 2 years. It's been really awesome because look at this, right? Edgefinder's bullish the whole way. Macro still looked good. Inflation falling, interest rates cooling, jobs market was showing weakness. During all this time, gold had a super cycle and Edgefinder picked up on it like crazy. And then what happened? Score starts to flip into neutral territory. We lose all those bullish readings because Edgefinder detected the inflation story was shifting. Inflation started to come in higher than anticipated. Jobs started to actually look okay, and Edgefinder bailed completely on its bullish bias. I have to say, like, I know I'm touting my own product here, but I'm genuinely really proud of Edgefinder's ability to have spotted that shift in macro, because the amount of pain to lose $1,000 an ounce plus, right? What, $1,500 an ounce or something like that of downside that largely could have been avoided by just following the macro, right? What you're looking at, by the way, this is a new tool that we have. It's the Edgefinder score history feature. You can look at historical score readings for different things across Edgefinder. So you can pull up US dollar, euro dollar, pound dollar, Bitcoin. We have all the different readings here. So if you're an Edgefinder user, explore this. It's under the top setups page and you can take your time on it. By the way, if you don't have Edgefinder, if you would like to get access to it, we'll drop a link here in the live stream chat. We are, I've mentioned this a couple times, and I know it does sound like a sales pitch. It kind of is, but it also genuinely is just me telling you this. We are raising the price on Edgefinder probably at the end of this week or next week. We are finalizing all of that detail. There's a lot of stuff we're building on the website around that change. If you've watched for a while and you've been wanting a copy of Edgefinder, this very well could be the last chance to get it at the price that it is currently listed at today. So if you are interested in taking advantage of our recent discounts, as well as a payment plan, if you need to set that up, we'll drop a link here in the live stream chat to where you can speak directly to a member of our support staff that can set you up with that discount before the price goes away and can get you set up on a payment plan if that is something that you need help with. So here is the link to do that if you need to speak to our team before the price of Edgefinder does go up in the next couple days. Okay, so gold is still flush and lower here. Let's go back to that 4-hour chart. Look at this. So if I look at readings right now, let me just take a look. What's the current price? Like I said, Calvin, if you shoot us a message, they can get you set up with what the current price is and what a payment plan setup would look like, etc. But again, it is up in the air and changing in the next few days. We are raising the prices. So with that said, gold currently, where are we at with gold? Gold actually got a interesting crowd sentiment shift in the last 24 hours. We are seeing Edgefinder score now go -2 with a -3 fundamental score, +2 on the COT score, and -1 on the technical score. So if I take a look here, we have been recently getting a bearish reading for gold. I would like to see a bounce here in gold price. So I don't mind that Edgefinder's kind of gone neutral today. But if we do get a bounce, that contrarian signal might go the other way. We might get more of a, crowd sentiment chasing the bounce kind of thing. But right now, if I show you this, if I go crowd sentiment put call ratio, and we go to gold for a second, crowd sentiment jumped here into high put volumes. In the last few days, or really, let me quantify this. As of May 26th, so yesterday's trading, we saw a surge in put volume on specifically the ETF GLD. So we saw a crowd sentiment go bearish on GLD, buying puts aggressively. So with that, if I go back to this, so that's going to make me kind of pause on shorting it today. Like, I'm not interested in selling gold here right now. But if we were to get a bounce, what would probably happen within the put call ratio is it probably would cool off a little bit, and that could present a possible short setup for me. So I'm watching this. I think, gold is absolutely flushing to the downside right now. We've got gold down 2.13%. As we potentially bounce, I'd be interested in selling that retest right now. That being said, we might not get it. Gold has been in this range since May 15th. So we've been range bound on gold the last few weeks, and we're finally flushing lower on the ceasefire or the potential stopping of the war. Kind of interesting. We have a little bit of a buy the rumor, sell the news event possibly on our hands. Just going to take a look at the old semiconductors ETF, which is, by the way, it's a broken chart. I don't know if you guys have seen this one recently. It's phenomenal upside move. Unbelievable. I mean, this thing is just the most crazy chart I've seen in a very long time. I've mentioned it's a bit of a tearjerker for me because I'm like, man, this is such an awesome rally. I wish I was in it. I'm feeling FOMO like any other person that would. If you watch a particular chart and it goes screaming in one direction without you, it does sting a little bit. So I am also watching the dollar index. I am already long the dollar. I am also still short my bonds position. Let's take a look at that because so I am short bonds. I have a short position on TLT. The 61.8% retracement got tagged on the 10-year yield. This kind of falls in line with my dollar bullish thesis, thinking that inflation could remain sticky regardless of the war potentially ending. Is the put call ratio a contrarian indicator? Yes, it is. So I use it as a contrarian indicator. I mean, it doesn't have to be. Some people use it in different ways, but I've found in my my research and some of the back testing that we've done that the put call ratio for my style of trading tends to be a better contrarian indicator. So if everyone sort of buys puts on GLD or buys puts on SPY, that's more of a contrarian bullish signal, and vice versa. If everyone rushes the call side, rushes the put side, it's a opposite reading that I tend to use. Anyways, yields are down here, but I'm very curious if we are going to sort of be resilient despite the headlines showing like, okay, ceasefire potential. But if the terms of the ceasefire are in fact something that the market doesn't particularly love in regards to the inflation story, we could get a band-aid on an open wound in terms of inflation. I still think that the path of least resistance for yields is still higher. So that is where I am positioned. I am short TLT with a stop loss. So if I'm wrong about this idea, then I'm just wrong. We are back to break even on the trade. I have a stop loss on TLT above the resistance point that we have marked up here. And this falls in line with my dollar bullish thesis, okay? Because the idea here is if I think inflation is going to stay sticky and rising, I think dollar moves higher and I think yields move higher in tandem. So that if that's my base case, which how am I coming to that conclusion? I'm not just doing it off the top of my head. I'm using my software to help me spot that. So inflation coming in higher than anticipated across CPI, PPI, the 2-year yield. Again, you can try and do this stuff on the top of your head. And if you spend all day staring at it like I do, it's very possible to try and do it off the top of your head. But why would you in a day where you can build something like this? Our team has built this the last 5 years to help moderate what is going on the macro fundamental side and to build a rubric style scorecard system for symbols that we all watch. Right. So you can think off the top of your head like, oh, I think inflation might be higher than anticipated. But I think quantifying it with some sort of scorecard system like this is really powerful. Right. So we're looking at CPI. We can see CPI surprised higher than anticipated. Same with the producer price index. Like we can see inflation coming in. We can see the 2-year yield remaining in a overall upward trend here recently, which is hawkish for the central bank here in the United States, the Federal Reserve. We also saw consumer confidence come in at 93.1, still beating expectations. That's positive for dollar. What's not so positive recently is the PMIs, which is a forward-looking economic indicator. Same with GDP growth. These have not been super positive. So that is a blemish on the story, but jobs data is also largely better than anticipated. The NFP report which we'll get new NFP data pretty soon. Next week, I believe. Next week, we'll get that. So we'll see. But right now, the last report was better than expected. Unemployment rate remains resilient at 4.3%. Weekly jobless claims came in lower than anticipated. We'll get new data for that tomorrow. ADP came in slightly worse than expected, and JOLTS job opening slightly better than expected. So we have a bullish outlook right now versus expectations on the jobs market. We have a very bullish outlook on inflation right now for the dollar, right? Not necessarily for stocks, right? Because high inflation is not great for stocks. It's not great for gold, right? Part of the reason why I think gold is lower is the new terms may still be inflationary in the eyes of the market. And so dollar staying strong, gold is backing off again, despite end of war stuff. I mean, it is a painful gold bull scenario right now. Like I think gold bulls had their fun in 2025, but it has been a painful year so far for the gold crowd. And I say that like as if I'm not part of the gold crowd. I am. Like I have longer term precious metals positions that I hold on to, but I have not been trading precious metals really since the beginning, since like January. I've really not touched gold very much. I now actually have a bearish perspective in the short term. I think this chart has really decidedly turned into a downward trend, and I've been saying that this week. So I'm still thinking gold can continue to move lower. I'm looking for that bounce to potentially fade. So we'll continue to moderate what is going on with the Strait of Hormuz stuff. Gold is down 2% this morning. Oil, again, you might expect oil to be down more than 4.5% on the announcement that the war is coming to a close type deal. You also have Bitcoin continuing, no surprise here. Bitcoin back down to 75,000. Another pain trade has been the crypto crowd. We talked about that the other day. The absolute pain of seeing pretty much no alpha on Bitcoin despite a roar in the Nasdaq, right? Typically, you see Nasdaq up 10%, you see Bitcoin up 30, right? Not so much in 2026. 2026 is like a pretty much semiconductors or bust story. Like if you're long Nvidia, if you're long Micron, oh my gosh, this thing is unbelievable. Like if you're long semiconductor stocks, you're having a monster year. If you're long pretty much everything else, you're just doing okay, right? Not, and I mean stocks, not gold. If you're long gold, it's been a rough year. If you're long Bitcoin, it's been a rough year. If you're long, you see what I'm saying? Like it's been a very narrow market, which is interesting, right? You typically, a narrow market, you don't necessarily want to see that for the long term. You'd like to see broader participation within the stock market. You want to see industrial stocks and healthcare stocks and energy stocks and consumer stocks. You want to see all of them sort of rallying together. You don't necessarily just want to see the semiconductor stocks go up forever and everything else kind of sit on the sidelines. That being said, again, a testament to momentum, right? What is going up can continue to go up. There is no denying that, the semis have just been a monster trade. Momentum has absolutely won out for the semiconductors names. If you're long semiconductors, SMH, I said this yesterday, I'm not, but if I was, I'd be putting the stop loss personally. I'd be trailing the stop loss here and just seeing where this thing wants to go next. Now that we've broken decisively above here, I would just be trailing that thing and continuing to move higher. I do have some exposure to semiconductors through my Magnificent Seven holdings. But, really it pales in comparison to being long SMH. So if you're long AMD, Micron, NVIDIA, Qualcomm, all those sorts of names, just absolutely rocketing. So very interesting stuff. Dollar index, I know we talked briefly about it here. My thoughts on dollar, still holding support. Looks nice so far. Someone asked in the chat to take a look at euro dollar, so I will do so in just a moment. Dollar, again, may still be sensing out some inflation, is still in the mix based on these terms that seem to be hitting the wire. Let me just check really quick if there's any pressing, urgent stuff. So I'm just going to read some headlines out here. The management and route of ship traffic through the Strait of Hormuz will be handled by Iran in cooperation with Oman, according to Iran's state TV. Iran state TV says military vessels are not included in this draft agreement. In return, Iran has committed to restoring the number of commercial transit ships through Hormuz Strait to pre-war levels within 1 month. U.S. military forces will withdraw from the vicinity of Iran and lift a naval blockade. And I think maybe the management of ship traffic through Strait of Hormuz being handled by Iran is maybe what the market is like, hold up, wait a second. The U.S. is agreeing to that, which I'm going to go ahead and say I think that is being perceived as inflationary. And you might say, well, wait a second, then why is gold going down? Like, I thought gold was freaking out because of the Strait of Hormuz stuff. Well, it doesn't help very much if the Strait of Hormuz opening is done so in a way that is going to structurally keep oil prices higher. You see what I'm saying? Like, yes, oil is down, but let's understand, if we're getting confirmation from Iran that the war is over in terms that would be de-inflationary or would keep oil prices lower, wouldn't you expect oil to be down like $75 a barrel? Like, you'd expect a bigger move lower. So it seems like the terms are being sussed out as not great for oil moving lower. And again, this one dang level, man, this $90 a barrel level on oil continues to be a problematic one. Like, the bears just can't seem to get over this hurdle. I'm curious. I imagine you're probably going to get U.S. responses here shortly. But look at this. I mean, again, terms are closing in, and there goes the stock market to the downside. Really interesting. U.S. stock market just opened up, by the way. Look at this. Nasdaq completely fading the rally. I'm not going to speak too soon because this thing is just like apparently going down is no longer in the dictionary of the Nasdaq. But I would not mind if it had a little bit of a pullback here. I know I've been saying that for a long time. So, you know, and to be fair, this is an exceptional move, like a very, very rare instance for the Nasdaq to move like this. You typically do not see Nasdaq make that kind of move. Like, typically you're going to see up, down, up, down, up, down, up, down. Like, you're going to see these sort of waves. But we have really seen on the Nasdaq, again, largely contributed towards the semiconductor trade. I mean, look at that. That is an incredible win streak for Nas. So we will see how all that goes. By the way, if you guys want to join our free Discord, we did launch a free channel where you can actually get access to our chat room and get in on the conversation over there. If you are interested in doing that, let me just pull this up. Yes, free chat is now available. If you want to share trade ideas, chat with other traders from the live stream as well as from our community here, then join us in the Discord. Link is in the live stream chat, or you can scan the QR code just below my camera, whichever is easier for you. But yeah, come join us over in the free Discord here, and we'll see what we get into over there. Guys, up next, we have Alan Perez taking over the stream. He's going to be taking a look at some macro, some fundamentals, taking a look at technicals and charts that he is watching. So don't go anywhere. Up next, you'll get a fresh set of trade ideas shared by the one and only Alan Perez. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good afternoon, wherever you guys are watching in the world. I'm going to piggyback off of what Nick was saying there, and I think he was talking about the progress that we're seeing there in the Middle East. Today we saw a little bit different. So usually the pattern is you see something positive out of the US, and then it is walked back by the Iran side. And Bashi, I'm going to point at you here, my friend, because Bashi says that he did a study, Bashi did, and that Iran is the one that usually tells the truth, although it may not be what we like to see. Usually the truth comes from the Iran side. So I'm going to take Bashi's word there. And right now you're actually seeing some positive headlines out of Iran. So maybe this is one of those things where you're getting some positive headlines from the US and Iran. So we can be in agreement there. And it seems like the reaction immediately was dollar down and the stock market up, oil down as well. So what we have seen so far is that they have a draft of an unofficial framework there that they're going to work with the U.S. and that the U.S. military forces will withdraw from the vicinity of Iran and lift the naval blockade. And this is what I really like to see here. In return, Iran has committed to restoring the number of commercial transit ships through the Strait of Hormuz to pre-war levels within 1 month. So that is some, right there, right? Some key data there that we can look out for. And the reaction initially, let's go ahead and see oil is down back to $80, or not $80, but in the 80s, I should say. We are still within the range here where I determine is the war still happening. So this is the upper end of the channel, the lower end of the channel. In my personal opinion, if you were to see a break below this level right here, 85 right here, if you see a breakdown and continuation to the downside, then that means, in my eyes, that the war is over or coming to an end. So, kind of what I'm looking at here as far as the stock market's pretty much loving that. I like what Tiger said. Tiger said it's not going to the moon, it's going to Saturn. Yeah, the moon is right over here. The moon is over here. This was the moon, right? We were all like, okay, new all-time highs. This is the moon. Yeah, Saturn, and we're approaching Saturn now. So we're way up here. So very well said there, Tiger. Good morning, everyone. Hope you guys are having a great day. Morning, Tiger. Good morning, Bashi. Hey, ball out, ball out. The bear has awoken. The dollar bear has awoken. Okay, so let's go ahead and see what's going on here. What I'm looking out for, right? Because I like to trade currencies, or like to reference the dollar index. That's where I like to start most of my analysis. Is that nothing much has changed as far as the price action goes. We are still within this range here. How many days has this been? From here to here, this is 12 days, so 2 weeks of just trading within this level here. So again, I've said this before, I'm kind of positioned, or I'm looking to position myself in dollar bullishness. I'm going to be trading the inflation store. That's where my eyes are going to be headed. That's where my attention will be. Inflation, yields, central banks, who's looking to ease, who's looking to hike, right? And we'll get to New Zealand in a second. But that's kind of like my main focus point right here, right? I think that's going to be the main driver here for currencies is, now that the war is over, which central bank is looking to ease the fastest, which one's looking to stay put, or which one's looking to hike rates. So kind of what I'm looking at for here. Dollar index, again, 12 days have been chopping around in this area here. So I want to enter long dollar. So I would wait for a break and retest of this 99.5 level and then continuation higher, or I just get the pullback, I get a better price, and my eyes take me right here to this 200-day moving average. And the 200-day moving average, if I put a Fibonacci from the low to high, that's going to be right at that 50% retracement level. So I don't want to enter prematurely because I do think that if you were to get an end to the war, I do think that you do get some dollar softness initially. Remember, the dollar has acted as a safe haven during this whole conflict, and so some of that will get priced out. So I do expect a little bit of dollar softness there. And so ideally, I can go ahead and pick it up at some discounted prices and then continue the wave higher. Now, why do I want to continue trading the dollar when you do get or anticipate some safe haven is getting priced out and you get a softer dollar initially? Well, I think that relatively speaking, comparing the dollar against the other peers, I do think that the dollar, or the US, the Fed, is one of the more restrictive central banks compared to other ones. That's just my personal opinion. The data shows it, right? Our inflation is starting from a higher vantage point versus someone like in Canada or something like that. So that's why I like dollar higher. So it's just a matter of finding a good entry. Ideally, the lower the better. That way I can get a better price and I can ride the wave to the upside. And then longer term speaking, I was telling Marco this yesterday, but dollar has been in this range here. I'm on the weekly time frame since April of 2025. So we've been chopping around here, right? I think there's a case where if you were to get dollar index breaking above 100.5, and I know my friend Ball out there in the chat's not going to like what I'm about to say, but if you were to get dollar index breaking this channel here, breaking 100.5, if you were to get a break and retest, I do think that we finally get out of this funk there in the dollar, and then you can target something like 102, 103, 104. Now, of course, that's getting ahead of ourselves, right? But I think that's probable there for the dollar. Now, another thing that's possible too, let's look at the other side, right? Let's say that you get to 100.5, and that's the level of resistance that has acted as resistance for this entire time. Maybe you get the new Fed chair, you get Mr. Warsh in there. Maybe he's looking to look past the inflation. Maybe he's trying to be proactive in rate cuts, and maybe you get some rate cut narratives when you get to this level. So that's a possibility as well. So that's why we have to see and wait for that technical confirmation. So yeah, that's kind of my thing there. So if you guys, again, I'm going to say this one more time. If there are any chart markups, anything you guys want me to go over, feel free to drop those into the chat, and I will do my absolute best to go ahead and cover them. Chemo says, "Hey Ellen, may I please get your thoughts on Pound Swiss?" I got you on Pound Swiss. Thoughts on BOJ intervention? I can cover that as well. I'll talk about that with Marco. So I'll go ahead and hold that one, Bamzuka, but I will definitely go ahead and address it. So just stick around for a little bit. When Marco joins me, we'll go ahead and talk about that. Bashi, compliment. Alan's my favorite host. No hate on anyone. Thank you, man. I really, really appreciate it. I try my best. I don't know if you guys remember, but when I first got onto these streams, I'm very introverted. I was very shy. I have the recording for my first stream, and it was horrendous, man. It was horrendous. I don't know how James and Nick allowed me back on, but it was horrendous. But I really appreciate it. I try my best, and it's actually really fun. I really like chatting with you guys, even though it's a one-way conversation. I really like chatting. Okay, let's go ahead and see. Ballout's not liking the long dollar idea. He says, "JK Allen, good luck." I think it could work. I think we could both be right, Ballout. So from my understanding, Ballout, and this is why I like addressing both sides of the coins, right? I say long dollar. And then you be cautious at 100.5, because at that point, that's a solid level of resistance, and things can turn around, right? We don't know what the narrative or what the theme of the market's going to be if we were to get at 100.5. And I say if we get there, because you could get there, right? I could be long dollar from here or here down low and target 100.5, but then Baba has a longer term viewpoint of the dollar lower. And at that point, I could win the trade here from here to here, and then I could repivot to go short dollar. That's very, very possible. And in fact, we say on the channel here, you want to hold on to strong opinions very, very loosely, right? You want to be able to pivot. So I'm long dollar in the short term here. I think the macro supports it. However, I am always cautious, and I'm always aware of what the theme is of the market at any given day. And if I'm willing to flip, or if it makes sense to flip, I'll flip. Let's go ahead and see. Okay, so Pound Swiss, I got you. All right, so let's go here to the Edge Finder top setups page. And I do think that the pound basket is getting a bearish reading as a whole. So yeah, Pound Swiss, they're getting a very bearish reading of -9. Pound Kiwi as well. Pound Kiwi actually makes a lot of sense right now as well, just because you did have, and let me talk Kiwi first there for a second, but I'm going to go to the pound pairs. Kiwi, what happened, right? It's up 1.05% today. They were unexpectedly very, very close to a rate hike there. So Marco and I talked about this yesterday, but essentially we were going over the probabilities, or which central banks have hiked and which ones have room to hike. And my personal opinion, I thought that the Kiwi was actually done hiking. I think that they did most of what they could, and that they're looking to go ahead and be very loose in their policy as soon as they get the green light too. However, yesterday they surprised to the upside, so they were actually very hawkish. They were one away from being a rate hike instead of a rate hold. So that's why you're seeing that bounce there in the Kiwi dollar. And so the Kiwi dollar, let's go ahead and go here to currency strength here. And you can see that the Kiwi dollar is the clear winner right here in pink, right? Look at that monstrous move up there. So Kiwi dollar is on top there today, and that's why I bring this up, so we can go to Pound Swiss, and then we'll go ahead and look at Pound Kiwi. So Pound Swiss is getting a very bearish meeting of -9. Now, remember, I don't like trading when you're like in the middle of this range. I would like to see some kind of structure that I can base this trade off of if I'm trying to go short. So ideally, right, if you were to hit the 200-day moving average, that could be okay. But ideally, the top end of this range here, and then trade it to the downside, right? Because currencies are mean reverting. So they usually like to bounce off of zones. So ideally, I would like to go ahead and short from here. Right here, you're at the midpoint of this range here, so I wouldn't take this trade. Let's look at Pound Kiwi, though, because the Kiwi dollar is now strong, very, very strong. And you know that the pound basket is very, very weak. So let's go ahead and see what we can find ourselves on Pound Kiwi. So Pound Kiwi, what are my eyes taking me? My eyes are taking me to like this. If I can get some horizontal zones on this chart here real quickly. Let's see, probably something like this. That's probably what I will look for. So if I can get some kind of a pullback now, I know we are seeing a huge move in the Kiwi dollar today. So what you could also do is see if you can get some kind of a pullback of this big zone right here. So I do like that the 61.8% retracement level is lined up right here. I'm going to zoom in on this chart here. This red moving average is the 50-day moving average. So I actually do like that the 61.8 is lined up right over here. So in my personal opinion, what I would look for, and this would be an aggressive entry, would be a pullback into something like this. Something like this. So I'm going to clear the chart here. If you want to pause the video, take a screenshot, whatever. Again, this is not financial advice, but to me, this would be a good pullback here in pound Kiwi, where you get a pullback and then you can take it to the short side. And then as far as stop loss goes, because you do want to have some defined risk, right? I would probably put a stop loss above structure up here, somewhere around here. Now, this is a big stop loss. Remember, this is 230 pips, right? But again, you do need to have a wide stop loss. You do need to have stop loss above structure there. And what you can target could be a 1-to-1. I think a 1-to-1 is perfectly fine, right? You could probably get into the trade with a expectation of getting a 1-to-1. And if it starts to work out in your favor, right? If this thing really starts to move, then you can obviously move your take profit lower and lower and lower, and then trail your stops accordingly. And, you know, active trade management 101, right? But I do like pound Kiwi. I like the idea. The central bank of the New Zealand is surprisingly hawkish, so that could really work. And you also do have the pound basket getting a bearish reading as well. So that's the beauty of fundamentals, right? The tool right here that I'm using is the Edge Finder. You can sort out what's working, what's not. And you want to find the very, very strongest reading. And right now on currencies, you're seeing a lot of that. You're getting very bearish readings on the currencies and very bullish readings, or not very bullish, but you're getting bullish readings on the currency. So it seems like currencies are pretty hot right now. Marco, how are you, man?
Hello, I'm doing pretty well. How are you?
Pretty good, pretty good. Can't complain.
Awesome, awesome. So what are you watching for today? I'm seeing a lot of movement on, I think, Aussie NZD and NZD in general.
Yeah, the big mover here is going to be Kiwi. They were 1 vote away from a rate hike, which was not what people were expecting. So that's why you're seeing that big boost there. Now, for it to continue another 1% to the downside, I think probably not, right? But I would expect some kind of a pullback. But this is a big move nonetheless. And, you know, oil, although the war could come to an end very, very soon, what you can doubt is that the oil has been elevated for a long time, right? So to assume that just because the war ends and oil comes down, that inflation automatically falls down as fast as oil prices do, is unrealistic, right? It takes a little bit of time there. So we're starting to see some more clarity as to where central banks are, right? What kind of tolerances they have for inflation. And with New Zealand there, it seems like they kind of have not much tolerance there for inflation there. I thought, you know, previously before this meeting is that the Kiwi or the New Zealand central bank is a little bit more proactive, right? Like they're looking to look past certain data points and cut rates sooner or hike rates sooner. So what I got from it yesterday was that they're actually very restrictive at the moment, which was new.
Yeah, absolutely. I actually had a short. So I had a short on NU. Let me bring it up here. The bet was that there is 76 basis points of hikes priced in, and my bet was that the RBNZ will be less hawkish than what market thinks. So took a sell. Initially, it went into profit, but then, of course, the RBNZ meeting was super hawkish, so took a break even at the end. Managed to get out for break even. So my idea was completely wrong at the end of the day. But I did some calculations. I tried to calculate the expected value of the whole event. So I built like 4 scenarios. I gave each scenario a probability, and then I tried to calculate the move on NZD-USD, approximate move. So then you basically time the probability to the move, and then you sum everything up and you get the expected value. The expected value that I got was negative. So I thought that it was worth being short into the meeting. Looks like the RBNZ is mainly concerned about inflation. I think Anna Bremen, if that's the name, she's the new governor there, and she wants to be firm on inflation and firm on battling inflation. So that seems to be the prevalent story. So yeah, NZD seems to be gaining a lot of value. I think the biggest drop is on AUD NZD, which I think James took. I know he was talking about this trade, selling Aussie NZD, and it seems to be working pretty well so far. Did you have a long on this one?
I did have a long, yes. That's a phenomenal trade. Look at that, bam, stopped out. Yeah, that's a phenomenal move there, and I think Aussie Kiwi had the bigger move, down 1.5%, and New Zealand
Let me
dollars
let
up
me add your screen there.
1.06.
Okay.
Oh yeah. Yeah, this is what I talked about right here. Boom.
Okay.
Yeah, Aussie Kiwi had the bigger move there. So that's gonna be my bigger focus there is going to be central banks where they're at. You know, because everyone's situation is affected differently too. You mentioned something, Marco, and that was that the Kiwi, Royal Bank of New Zealand or New Zealand in general is very, very much focused on inflation. One thing that I
Yep.
learned not too long ago, and I learned this, I was listening to Nick, but like in the UK, they don't have a dual mandate. They don't have
Yep.
a dual mandate like the US. So if they want to aggressively target inflation, they can. They can do that. So that's going to be my biggest emphasis is like seeing where central banks stand.
I think the US is the only central bank with a dual mandate. I think most of the other ones, the big ones, have only a mandate on inflation. The thinking behind it is, let's say the unemployment rate is running at 8%, but inflation is running at 6%. Well, if the unemployment is 8%, that's only impacting the 8% of the people that are without a job. But inflation being at 6, 7, or 6, 7, 8%, is
Affects
basically
everybody.
yeah, that's impacting everyone in the country. So that's why they have a mandate that mostly concerns inflation, and that's why I like the Fed a bit better, because I think it's easier to balance. It's easier to predict what the Fed will do because they need to balance the growth and the inflation. While with other central banks, you're mostly looking at inflation. You're not really paying a lot of attention to growth. For example, European Union has had really, really low growth in the past few years, and the central bank just doesn't seem to care. Their only announcement is always, we have lowered inflation back to 2%, but there's no mention of growth. So that's kind of a problem in my opinion. You should also fix growth if you can, of course.
Out of the European countries, Marco, which one do you think is the most vulnerable?
From the Strait of Hormuz closure, or? Well, I would say Germany, because Germany shut down most of their nuclear reactors recently because they went green. And now they're, of course, regretting that massively. I think 30% of Germany's energy came from nuclear reactors. And now most of it is coming from Russia. So Russia and, of course, the Middle East. So, yeah, how about that? So Germany, I think, is in the worst position. France is a bit better because they still have a lot of nuclear reactors online. But most of Europe is buying oil from the Middle East region, from Russia as well, on the side, so that no one knows, but everyone knows. So the closure is definitely impacting the Europeans, and I'm seeing it at the gas station every day. It's just a matter of time before it starts translating into actual prices that you pay in the store, that you pay in the restaurant, that you pay. I mean, even, I don't know, a gym membership, even that can go up.
Yeah. And that's why, Marco, I asked that question, but one of the things that I'm looking to participate in, if I get the pullback too, is the euro dollar.
Okay.
One of my bigger things there, I'm waiting for a pullback. In fact, I don't know if I want to categorize this as a pullback. Like, I don't know if I want to jump into this yet. I do think that you have a little bit more of a bump to be made if you do get an official end to the war. I think that you get a quick flash of risk on, and what that would look like was probably Aussie up, Kiwi continues going up, dollar down, right? And so that would cause euro and the pound to go up just a little bit there. But I do want to ultimately short this pair. I'm thinking the 50-day moving or the 200-day moving average there in yellow at the 50% retracement level, or the 61.8. We did tap into the 38.2, so that could be valid. But again, I don't want to hop in there because I do think that, again, if you do get an official end to the war, dollar does get some softness into it. So that's kind of where I'm looking to do. But besides that, Marco, any other trade ideas or anything that you're looking at besides the currencies?
Absolutely. So I think one thing that is interesting is, if we look at, let me just put my screen on the stage. I think James is having some internet trouble, so we're gonna change the screens ourselves in the background.
Sure.
If you look at in the indices, so you look at the S&P, kind of slowing down. You look at the Dow, already had a pullback. You look at the Russell, slowing down as well. And then you look at the Nasdaq. Well, it did have a massive blue candle, which now retraced, but the Nasdaq is clearly still going up, especially with SMH, which is the semiconductor ETF. And this thing is bringing the Nasdaq up. But the rest of the US stock market seems to be running out of steam. So does it want to roll over? Maybe, but that's the first indication that the rally could produce a bigger pullback, or at least a smaller pullback to the, let's say, 20 MA. So you're getting the S&P, you're getting the Dow, you're getting the Russell slowing down, you're getting most of the Nasdaq slowing down, but only the semiconductors are raging higher, which is not really a super bullish sign. So what do you think about it?
Yeah, I mean, I'm so skeptical about equities market. Like my mind takes me to like I see on social media, right? Because I like my algorithm is traders, right? And it's like, oh my God, the Nasdaq, right? Easiest thing in the world to trade. I'm like, yeah, man, look at this chart.
Yeah.
Like if you are not waking up in the morning, if you're a day trader scalper and you're not waking up and buying the Nasdaq and you're not profitable doing so, like, dude, there's something wrong there, right? Like, come on. But my thing is like you can somewhat get used to an environment that's not the usual environment. And so that's what scares me there is like not even that, right? Not even the day traders or scalpers out there, but the investors that are seeing this, right? That are probably not as in tune with the markets, and they see, oh my God, market's going up. Let me go ahead and buy up here. I think that if you were to get some kind of a concentration risk at the current prices or whatever, any missed expectations, anything like that, right? Like that could really, really hurt people. And the fall in the equities market could be very violent. So I'm not going to touch it. I'm just going to be patient. And whether that means I'd be patient for another week or another month or another year before we get a meaningful pullback, then so be it. I'll try to find something else, an opportunity somewhere else. But for now, there's no way I'm trading this market. Because also, too, you don't want to short the equities market or the indexes because it can go another 2, 3, 4, 5%, right? You know.
Absolutely. And I think we have one trader in the A1 Discord who specializes in just buying the Nasdaq when he wakes up in the morning and selling it after the trading session. And I think he's doing pretty well in these markets.
I mean, I would hope so, man, because if not, I got to really talk to him or something, right? Like, but yeah, that is the current environment that you're in. And again, you can be very spoiled, right? Especially if you just start off with this environment, you're like, oh my God, trading's easy, it's the easiest thing in the world. But again, if you getting concentrated too much in the current prices, there could be some real consequences to that.
Absolutely. And I think the biggest number that the markets are looking at and that I'm personally focusing on is the PCE. So if I bring my screen on the stage and we go to the news calendar, so we have tomorrow the core PC price index. The forecast is for 0.3%. I did some research into it, and supposedly there's actually a high chance it prints 0.4%, so that it prints a bit hotter than the forecast, which doesn't really help equities, but definitely helps the US dollar. So you mentioned that you were looking to sell EU, but on a bit of a rally, right? Okay, so you're looking for, let's say, a bit of a rally, and then you would be happy to sell.
Yeah. Yeah. So if you were to get that hotter PCE number, then obviously dollar continues to firm up there, and I don't get the pullback that I'm looking for. But I'm willing to take that risk. I don't know what the number is going to be, so I'm going to just take that chance. But yeah, I mean, equities could actually get hurt from that. But again, it seems like the equity market is looking past that, though. That's the other thing, right? It seems like the market, and the market does this because they're forward looking, but it seems like it's front running the idea that sometime eventually the war will end. And so that's what you're seeing there in the prices. Like they have already priced in the war ended, right? That's old news now. They're looking at other things. So yeah, that's kind of the dilemma there with equities. But as far as tomorrow goes, right? Ideally, I get some kind of a softness there in the dollar index. Maybe you get some kind of a positive headline and that overrides the PCE number if it comes in hot. There's so many different scenarios that can go on. But me, I'm just going to kind of stick to my guns there. I'm going to say, well, I'm going to try to wait for some kind of a better pullback in the euro dollar to go ahead and short that. And if I get it, I get it. If I don't, another way I can play it is I just get a break and retest, right? You get a solid break and retest of it, and still I can still participate with the overall trend.
Yep. One chart I wanted to bring up from my Twitter. Let me just put it up there. So this is why trading geopolitics at the moment is so hard. So this is the number of Bloomberg articles containing the words Iran and deal in 2026. So every single week this chart goes up, and we already had like 1, 2, 3. This is the 4th spike of Iran and deal articles. So that's why geopolitics is extremely tough, and predicting when the war will actually end and actually betting on it with positions is almost impossible. I'm sure there's someone out there that can do it, but for me personally, I'm just trying to ignore the headlines and focusing on the economic data. What do you think about gold? Gold seems to be selling off a bit today. So it's, let me put it up. It's selling off. It's kind of breaking that lower trend line that we're seeing. It's not really acting as a risk on asset anymore. It just seems to be selling off alongside of Bitcoin. So what are your thoughts on that?
Yeah, there's two things that could actually happen. Let me go ahead and put my screen up there real quick.
Sure.
I've said this before. I like gold at 4,400. I would be a buyer at 4,400 actually. However, you still have yield sticky. Now oil is coming down, so there could be. However, markets are very, very cute at doing this, where like you get a good level, and now somehow the fundamentals line up with this level, and then the obvious happens where it just bounces off a strong level of support, right? That's kind of where my mind is going, right? You also do have the risk though of this is a very strong level in my personal opinion. Technicals are subjective, so take that with a grain of salt, but this was once resistance. You failed it again. You broke out of it, retested it, and you shot up higher. Then you had a mean drop. You found support there. You rallied again, had another mean drop. You found some support there. You also bounced off of that 200-day moving average to a T. And now you are finding your way right back at this zone again. So looking at it here, you have positive headlines in the Middle East, right? You have oil coming lower, and somehow gold found its way to the magical zone, right? Or the zone that I think is really, really good. So I think that if you could take a risk-defined opportunity at gold right here, I would take that, actually. I actually would take that. Here's the problem.
Okay, cool.
This is also a very strong level here. So if you break this level, then the opposite could be true, just as hard, just as violent. So I think that you can get some pretty strong momentum here for gold to the upside. However, if you were to break this level as well, you could also get some equally as strong price action to the downside. So that's kind of the thing there. So I'm watching yields first to see what's going on. By the way, did you see the 2-year yield here? Yeah, I don't know what happened. I think that was a glitch because it wasn't the same on the other ones. But yeah. So maybe I don't know what happened there. But again, yields, right? If yields continue to fall lower, then that's good for gold. Oil lower, which is happening right now, that's good for gold. So it'll have to be a combination of a couple things, but I do like gold right here. Let me look at the edge finder real quick here to see where it's at.
It's probably still running at neutral.
Is it?
But
Okay.
I think it's positive at least, so I think it's above 0. But the reading is it's actually -2. Okay,
-2.
So it was positive last week, I believe. But what is cool to me is more and more traders that I personally follow are starting to turn bullish on gold. And now you have turned bullish as well, so that kind of gives me a pretty good confluence to stay in my long position. And one more cool thing is most retail traders online are pretty bearish on gold, which is a great contrarian indicator. So if you scout social media a bit, you're going to see some bearishness as far as the retail sentiment goes just by reading the comments. And that's a pretty good contrarian indicator. So a lot of professionals are bullish. The retail seems to be hating gold. I think that's the bottom, right?
It could be, right? And I like the trade idea. Don't get me wrong. Like this is one of those things where you just take a risk defined position and you let it be, right? You're getting, in my personal opinion, in I guess you can call it what's the word I'm looking for? In the recent relative price action, you're getting a pretty good discount relative to where price has been overall in some time, right? So, I was very patient on this, right? Very, very patient on it. It's slowly creeping there. It's been a slow grind, right? From here to here, it's been 49 days. 49 days where I kept saying the same thing over and over and over again. I'm like, I'm just gonna wait for it to get here. And now as price is approaching here, now you're getting somehow, right? You're getting peace headlines, you're seeing yields lower a little bit, you're seeing oil a little bit, right? Markets are really, really funny, man. Markets are really, really funny. But I am over here on my time here, Marco. My apologies there.
No
I'll go
worries,
ahead and let
no
you
worries.
do your DNA funded challenge. One thing I would say though, before I go ahead and pivot out here, is go ahead and cop yourself a copy of the Edge Finder. Super, super great tool here. I'm going to be watching this religiously for that gold confirmation as well. Again, I don't want to be premature in my entry there. I'm going to wait for that confirmation because as you do see yield softening and stuff like that, that's going to impact the reading for gold. So I'll wait for that one there. And also join the Discord and Telegram channel. It's completely free value. So go ahead and do that. And Marco, thank you so much for the great conversation. As always, man, we'll talk tomorrow.
Thank you as well. And see you soon. Yep. Goodbye.
All right, man. Take it easy. Bye-bye.
Let me put the link for the giveaway. So it is going to be a 10K one-phase account. And the procedure to enter the giveaway is this. So first you need to enter the free A1 trading Discord. There's a jot form in the comment section, which you click, fill it out, enter the Discord. It's free. And then you find the channel called giveaways. Okay, the channel is called giveaways. In that channel, you will find another jot form, which you fill out, and then you enter the DNA funded giveaway. I'll put all of the names, all of the entries in the wheel of names in 5 minutes, and then we will pick a winner. As far as charts go, so I did have that NZD-USD position, which was a signal in the A1 Trading Discord. It ended up being a break-even position. So I took the position on Monday at 0.58731. The bet was for a more dovish RBNZ than the market expects. Initially, it went into profit, and then it started retracing higher. When I woke up in the morning, I closed it for break even. If you were following the signal, hopefully you closed it at the same time as well, because right now you would have to close it for a loss. So got a bit lucky, managed to get out for break even, but it could have been worse. So if we didn't get the initial sell-off, which could have been the bigger players preparing for a possible more dovish RBNZ, this was a pretty popular trade idea. So if you do some research online, this was popular among some of the banks, some of the players, because the market was pricing in so many rate hikes in New Zealand. So this could have been some of the bigger players entering. Again, doesn't have to be, but it's interesting to think about it. So I'm out of this one. On EU, I am out as well. Took plus 0.6% profit. I'm still in gold, which is running in drawdown. So the gold position is not really doing the greatest. But I'm with Alan. I think this is the bottom. I think this is a pretty good opportunity to buy. I think this is a pretty good level to get in. It makes sense. The probabilities are stacked in your favor. My win rate is only around 45 to 50%. So half of the trades that I take will end up losses, but my winners are far bigger than my losses. Now, if you look at something interesting, you go to Kinfo. This is a pretty good website for looking at track records. So verified trading performance track records. So you have the top 10 traders on this leaderboard. Like the first one made 15 mil, and it's all verified through verified brokers, I believe, like Interactive Brokers and verified brokers. Basically, you have Steven, you have David at 9.7, you have Average Guy at 9.3 million. So if you take, let's say, David, and you look at his win rate, so this guy made 9.7 million in, what is it? Let me see. If we go to profit from 2016 up until now, and his win rate, take a look, is only 48.23%. And that's the reality. So 50% win rate, You don't even need a 50% win rate. It can even be lower if you keep your winners big and losses small. So half of your trade ideas will most likely end up being a loss. And that's what most traders cannot deal with. So they quit or they search for the holy grail strategy with a 90% win rate, which of course does not exist on a large sample size. Unless you're a market maker. If you're a market maker, well, then you have, I would say, a 95% win rate. But market makers, it's basically impossible to become a market maker if you don't have huge capital, if you don't have programmers, if you don't have really, really smart people doing the market making and programming the algorithms about it. You can read more about it through, I don't know, Claude or ChatGPT. It's pretty cool. It's pretty cool. So market makers are the biggest winners in the financial markets by far. On the watch list right now, what do we have? We have gold because I'm in a position. We have the Nikkei and the Nasdaq. Equities pulling back today. I'm of course looking at the 20 MA to get in. I think the 20 MA is a nice level. Let me just see the form for the giveaway. Let me just take a look at that. So today is the 27th. Okay. I can see someone says a form has an error. You can only enter with one email every 30 days. So the form resets once per month. That means one email works for that month. If you have a second email, you can use that. Otherwise, you're going to have to wait for the reset of the form, which happens by the end of May, I believe. That's how the A1 team has it set up. Yeah, looking for pullbacks on the Nikkei and on the Nasdaq. At the moment, as far as Forex is concerned, I don't really have any new ideas. Something for me to work on. I need to do more research, to do more reading. One edge that I'm seeing at the moment is apparently the core PC price index could print hotter than expected. So the forecast is for 0.3%, but there's a very high chance it prints at 0.4, which is pretty bullish for the dollar. So I'm looking to see if I can exploit that in any sort of way. But I'm not yet sure how to put that in a trade idea, and I'm not yet sure about the exact probabilities behind that hot print. So I'm going to do more research on that topic. Let's do the giveaway now before I forget. So let me copy all of the entries. Today is the 27th. 27th of May. Put the names in the wheel, spin. Okay, let's see. So, Frank C, congrats on being the winner. It's going to be a 10K one-phase DNA funded account. I have your contact information. So after my segment ends, I will send you an email with the free code or with the free challenge. If you're looking to get funded, we have a discount code for you. A1 Live, 25% off any DNA funded challenge. Okay, so A1 Live gives you 25% off. A little update on my personal account. This is my 25K two-phase funded stage account. I'm down still $500. I just cannot seem to break out of that drawdown. So I have 3 positions in. Both are in green, in the green. Yeah, both are in the green, but not really doing so well. I mean, it's fine. It's fine. And this challenge is purely traded by ChatGPT as an experiment for my YouTube channel. And the performance has been okay so far. So past phase 1 of a 50K, past phase 2, blew the funded stage, which is not the best, but it happens. And then past phase 1 of a 25K, phase 2, past now on the funded stage, trying to get a payout. I've had a great experience so far. There's a big broker behind this company, and they're using Trade Locker for trade execution. In my personal opinion, it's the best software for trade execution. Like, I've tried most of them. I've tried CTrader, MetaTrader, DXTrade. I think I tried that one as well. Trade Locker, of course. And out of all, interactive brokers is just a mess. if you ask me. But of course, that's more tailored to professionals, so I get it. But Trade Locker is so simple. You have everything you need, and you have a risk calculator built in. So that's my favorite software at the moment. Comments. Sluggy, hello. Welcome to the stream. Aussie yen. You guys want to see Aussie yen? We can do Aussie yen for sure. SK says, Marco, what of the Nikkei? I have a buy at 61K, then another at 65K. Would you be willing to add more later? So for the Nikkei, personally, I think the 61K entry is great. 65K entry, I would not have done that entry because I think the price right now is pretty much overextended. I usually prefer to take positions near the 20 MA, but that's just me. The way that I would trail the position is I would probably keep moving the stop loss as we either create swing lows on the daily chart, or I would keep trailing it below the 20 MA. So those are the two styles and ways of trailing the stop loss that I personally use. You need to do what works for you. If you haven't backtested your approach yet, well, that's your first issue right there. So go ahead and backtest the best trailing stop loss or the best trade management style that works for you. You can try out what I'm doing. So look at the swing lows on the daily or look at the 20 MA. Both things act as pretty good levels of support, especially for assets that have a positive skew, which is the Nikkei, the Nasdaq, gold, Bitcoin. All of those assets have a nice positive skew. So it makes sense to use a trailing stop loss instead of a fixed take profit level. Tiger says, agreed, Trade Locker is the best. Yeah, I love it. It has like a dark theme to it. It's much faster in my personal experience than C-Trader, or not faster, but much more intuitive, much easier to use, and it has less bugs. I've had some bugs happen with C-Trader. With Trade Locker, no. So Trade Locker is great. Aussie yen is going to be the last thing that I do, and then I'm going to flip the stream to James. So let me check out Aussie yen. Personally, I'm not interested to do anything with the yen. I think right now the risk of an intervention is very, very high. So let me quickly look at the edge finder here. Let's go to the edge finder. Let's see the reading. AUDJPY. Neutral score, so the edge finder is with me. Personally, I would avoid doing anything with the yen at the moment. I think the risk of an intervention is too high. And for the Aussie, I don't have a clear bias either. I was bullish, right now I'm neutral. I've ran out of time. Thank you very much for watching. I wish you a great rest of your day. I'm going to be giving one account per stream for Thursday and Friday. And yeah, don't go anywhere because you have James coming on in 15 seconds. Goodbye.
What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Hello, hello. Happy Wednesday, ladies and gentlemen. Hope everyone is well. So What a fantastic day. So I'm still in the Nikkei position. I think we spoke about, we've been speaking about this one for a couple of weeks now at this point, I think. So entered down here on the 50% retracement. Then we did have drawdown from there. Added in again at the 200 moving average. So I've got an average price down here. I did call it for my Discord here though, so I've not moved the trade position, but personal average price is down there. So yeah, really, really nice so far. And of course, how could we not mention trusty edge finder Nikkei bullish score of 6? Fantastic stuff. It's like the stars have aligned. And then, ladies and gentlemen, hold on to your hats. Aussie, New Zealand, absolute fall off a cliff. So I was talking. I've been talking about the Australian dollar for probably 3-4 weeks now, saying that this market or the currency was really crowded. The rally that we've been having on this weekly time frame is not sustainable. We're very deviated. We're, kind of doomer type talk, I'll be honest. However, the entry was a little bit early, granted. However, I was fine to take it. It is what it is. Then we had the RBNZ come out last night or this morning, depending on your time zone, flipped more hawkish. So we've had that pricing in, and we're continuing to see the New Zealand dollar gaining strength. And, as we've already been discussing, the RBA was, the most hawkish central bank, basically the whole of this year so far. And now that rate advantage, or the stance advantage stance advantage is starting to close as we've got the RBA more in a pausing stance. GPUSD, as I said the last time, this isn't my trade. I'm not going to take any credit for this. This was a trade that Nick sent to his Discord. I was in bed at the time, and I was like, you know what? I'll take it. I like pound dollar. But we also have that on the edge finder. We'll take a look at the edge finder in a second. Pound Swiss is in a little bit of profit. This one's running really smooth so far. Not running really smooth. It's still around entry, but I really like the setup. So obviously, we've had the trend line. I mean, trend line, give or take it. Who really cares about trend lines? But you can't really deny that this one is quite relevant. We've obviously come up, spike to the downside, come up here, spike to the downside, come up here, spike to the downside. Overall bearish trend as well on the daily. Higher time frames are bearish. Monthly time frame, very bearish. Weekly time frame, also very bearish. So it's really simple, very straightforward. And again, it is on the edge finder, which we'll pull up shortly. And lastly is pound New Zealand. Absolutely wonderful trade. Beautiful. The only problem I've got with my portfolio at the moment is I'm a bit too exposed to the sterling. So I like to cap my exposure to any single currency or asset at 2. So the way that's calculated is basically just very, very simply, you take your currency pairs or whatever it is you're exposed to. So for example, here we've got the Australian dollar, we've got pound dollar. I'm not going to include Nikkei here. Pound dollar, pound Swiss, and pound New Zealand. So I'm short on Aussie New Zealand. So I'm +1 on New Zealand, -1 Australian dollar. And we just calculate it like that. So now I'm short 3 times essentially on the pound. So that is something I'm monitoring. So I'm probably going to cut pound dollar pretty soon, just because it's not doing anything. I think pound Swiss and pound New Zealand have a little bit more potential right now. Anyway, quick fire. Nice catch on Aussie New Zealand. Thank you very much, Jaylene. Sluggy, good to see you. The R3V4X, I'm not going to try and say that, but yeah, hello. Excellent day for you, Sluggy. Good stuff. Nikkei longs, pound New Zealand, pound dollar shorts all running nicely. Very good to hear. Yeah, they are running all pretty well so far. So yeah, Nikkei bullish with a score of 6. Lovely stuff. US dollars getting a bullish score as well. What else are we in? Pound New Zealand, as I just showed you, the most bearish on the edge finder with a score of -10. Pound Swiss is also bearish with a score of -9, and pound dollar. So we are positioned, or at least I'm positioned, very well at the moment in line with the fundamentals that the edge finder is showing. So I'm very satisfied and very happy. Just to pull up the Nikkei a little bit further, what have we actually got going on here? So technical bias is bullish. I mean, I don't think there's any arguing that. Crowd sentiment is bullish. I want to look into that actually, because I was looking at the put to call ratio on the Nikkei this morning because I was making a video on it. And actually, I thought it might have been a bearish signal, but I need to recheck because I might have made an error. Institutional activity is neutral. So COT net positioning is bullish. However, the latest release is bearish. Economic growth is bullish, inflation is neutral, and the jobs market is bearish. Now, something else I want to discuss regarding the Nikkei and the yen is the Bank of Japan. So we've got, I think, if I remember correctly, it's a roughly 75 to 80% priced in that we're going to have a hike by the Bank of Japan in June. The thing is, when we are considering things like that, like, you know, on the Nikkei, oh, Bank of Japan's going to hike rates, we need to sell it or we need to close it. It's not really that simple, because if we've got, you know, a 75 to 80% price in or priced, so you get what I'm saying. We've got a majority of that hike priced in. It's kind of done. You know what I mean? So now it's a case really of whatever the forward guidance is. Unless the Bank of Japan doesn't hike or hikes more than we expected, then it's going to be a bit of a problem. But so far, it's not an issue. So from there, after the hike, I would expect a more dovish tone. I don't think this is the start of a Bank of Japan hiking cycle. I think it's just going to be a single hike, and then we'll move on from there. There might be more hikes in the future. Of course, I'm not going to write that off, but I don't think it's going to be hike, you know? So I'm completely fine sat here in the Nikkei. White House on X indirectly denies the Iran state media reports. Yeah, I was just looking at that here. So, yeah, we had relatively good news. So what did we have? In return, Iran has committed to restoring the number of commercial transit ships through the Strait of Hormuz to pre-war levels within 1 month. Obviously, pretty good. And then scroll up, White House on X, as Alan actually said directly or exactly. So we'll see how this goes. I think it's a very difficult environment, really. It's a case of someone says one thing or backs out of something, or someone says that's not true. It's a mess. It's like being on the playground and someone's like, oh, did you know that guy fancies that girl? And then it's like, oh, no, they didn't. No, they don't. Oh, wait, yes, they did. It's a joke, to be honest with you. So I don't care. There is nothing I can do about it. I'm not trading around it. So I'm done. I don't care. I mean, that was the greatest of respect. But anyway, what have we got? So as we said, the RBNZ pivoted hawkish. So I think New Zealand dollar is the way to go. And I really like Australian dollar and New Zealand. I think the unwind on this position could be, or this market could be crazy. The only concern I've got is that we might get a larger correction. So what normally happens when we see this type of move in a liquid market like Aussie New Zealand or Pound New Zealand, whatever it may be, when we get these really aggressive, really impulsive candles, it's really common to just see them get corrected eventually. It might take a couple of hours, it might take a day or two, but I don't really want to sit through that. What I would ideally do is wait for this market to sort of bottom out a little bit, take profits, wait for the pullback, and then reallocate back in at a better price. So I think that's the plan. So it's really just a case now of waiting for signs of this bearish move as losing volume, losing momentum, and then I can close it and get back in slightly higher. So Nikkei wise, I've got no plan here. I'm just letting it run. It's risk-free. It is what it is. But yeah, that's it. There's nothing else on my side to keep you updated with or to let you know about. The S&P 500 seems to be running out of steam a little bit. I mean, we did break the previous all-time high here, but we've double topped yet again. So I think it's really a case of what happens here. You can view it a few different ways. So you could say, if we do get de-escalations, that in my opinion, we can get two outcomes. And it's difficult for me to sit here and say it's bullish or bearish. And the reason is because for quite a while, I was really confused. I just couldn't figure out why the S&P, the Nasdaq, why these markets were doing so well during what we would consider risk off. We had yields up, we had a war, we had inflation. Why was the S&P, the Nasdaq doing so well? Anyway, seems like the most simple answer to that is that investors were using the equities and indices markets as a hedge for inflation. So if we get the de-escalation, you can say, oh, so that's a risk on, that's positive, it's good. That would be bullish. But then you could also look at it and say, oh, actually, if inflation is expected to then come down, are we going to see profit taking and unwinding of this inflation hedging that we've been seeing? So I think actually downside is a reasonable option there. But of course, we'll see. I'm not putting any money on the line. I'm not confident enough on that yet, just yet. AUD CAD. Yeah, we could have a look at that one. How's the weather? Well, I went to the beach on Monday for the first time in like 2 years, and I'm sunburnt, so not great. I'm in a bit of pain. Oh dear, lol, USA doesn't want to accept anything unless USA is the one writing it. Yeah, it's a bit of a messy situation. If you're looking to add in the Nikkei position, what would it look like? Okay, we'll take a quick look at that, and then we'll move on to Aussie CAD. So there's 2 options here. Oh, actually 3 options for me to, well, no, we'll stick with 2 options. So either we get pulled back down into these highs and a rejection, and we continue higher. I would add in. That's a very clean break, retest, continuation pattern. It's like bread and butter. Love it. On the other hand, if we get a complete 50% correction of this move, I would also add in there. So realistically, I think just looking at sort of the price action and structure, a 61.8% retracement is a little bit better just because we've got previous structure through here. I don't think we really got any meaningful structure at the 50% level. And if we use the 61.8, that would allow the 200 moving average to just come and sort of intersect with price as well. So I think that would just be a little bit smoother. So it's either a break and retest of this support level, or we pull back into the 61.8 and go from there. That's my scaling plan. But of course, that might not happen. So it's just a case of wait and see. James going to slap them? Slap who? I'm peaceful, Bashi. I'm not going to slap people. Anyway, AUD CAD. Let's see. So what's the Edge Finder saying here? I'm fairly sure the Edge Finder was bullish. So AUD CAD, we have a bullish score of 6. Technicals bullish. Institutions bullish on net position and weekly, which is quite nice. Sentiment is bullish, so contrarian. So retail is short. Economic growth is bullish. Jobs and inflation are neutral. So the problem is here for me, and this is just my personal way of trading, this is relatively meaningless because I like to trade fundamentals first. Sentiment is like the cherry on the top, but it's not the foundation for a trade in my book. So although it's getting a bullish score and I would look to buy, it's not super high conviction for me anyway. I think Australian dollar CAD specifically could be quite good, although I'm not necessarily bullish on the Australian dollar anymore. I think it does still have relative strength potential against the Canadian dollar. So with all of that said, we've got a bullish trend on the H4. The daily is bullish. Weekly is bullish. I'm going to say the monthly is bullish as well. Yes, it is. So back to the H4, where could we look for an entry? I think it looks actually quite simple. So depending on how you define highs and lows, you could draw the fib from here or from down here. I think I would draw it from here because there's not really much of a difference. Then let's see, what do we have through the left here? Not a whole lot of interest, but I think this is reasonable. So pull back a little bit further into the fib zone, come again and meet this 200 moving average, rejection from here and a continuation higher. I think that would be base case. That's the easiest way to look at this market. So yeah, but again, it's not something I'm really interested in being involved with at the moment. Good to point out, James, I backtested equities and XAU. Equities did well in high inflation, and let's not ignore growth was also holding up. What period are you talking about, Sluggy? What was the regime? Like, what was the driver of the inflation at the time? Was it just natural, normal inflation, or was there a cause behind it, like the oil situation? My YouTube channel's just been dropped in the chat. I would appreciate if you go and subscribe to me. I put out videos almost every day. I do my best to put a video out every day covering macroeconomics or education, something at least. So I would appreciate it very much. I'm trying to get to 5,000 subscribers. That's my goal for the year. Anyway, let's move on. What else do we have to pay attention to or to look at? The GBP is getting a bearish reading of -7. This is not a huge surprise if, just to flex a little bit. If any of you were paying attention back in November in the private webinar that A1 held, you will know that we were calling this. Euro Aussie longs. Maybe that's an idea. I know we were looking at this last week, I think. We were looking at the weekly support level. So let's just go back and have another look. So this level is holding quite nicely. Now that we've got the Euro Aussie reading bullish, I think this could actually be a fantastic opportunity. So as I said earlier, the Australian dollar crowded. It's kind of run its course with the hawkish RBA, I think. So I think something like this could be very nice. I think the stop loss might be a bit wide. So realistically, a 1 to 2 here is okay. I think I'm kind of planning this out loud because I've not paid that much attention to it, but stop loss just below this weekly low on the left initially. If we get a continuation to the upside, we could trail stop slightly tighter below this support level and maybe trim it by 20% roughly. Then on the next pullback, again, this is in a perfect world, of course, add in something like this and move this stop to break even. I think that's kind of the way to go. You'd have to kind of micromanage this just to make the most of it. And the reason that I'm kind of fixating on this is because it's a weekly time frame. This isn't a small trade. You would be sat in this for a while. And the way that I see this is if you're trading something on a weekly or a daily time frame, that's fine. But if you're taking 0.5 or 1% risk, is it worth it to sit there for 2 weeks, 3 weeks, a month, 2 months to make 2%? No. I could do that I could do that in a couple of hours on the futures market. Why would I do that? So I'm going to maximize a weekly time frame as much as possible, scale in and be kind of aggressive to a point. So that's my view on it. Of course, that's my personal risk tolerance and approach. Yours might differ. However, if you wanted to be a little bit more certain, I think waiting for this H4 to flip would be quite nice. So at the moment, we are still in this bearish trend technically. Until we can start creating some new highs, we can create a new higher low and sort of create, bullish structure. We can get these moving averages to flip bullish. Then that might be a sign to maybe look for some shorter term trades on the H4 or the daily time frame as opposed to the weekly. So there you go. GP in the toilet. Yeah, it's not looking good. 1980 to 2000 inflation averaged 4%, yet XAU was not doing well. But yeah, I mean, it's normal for gold to not do well. Especially we're getting yields up and central banks pivoting hawkish. So that one's not a huge surprise. But yeah, I think that counters a lot of the typical thought process behind the equities, Sluggy. So yeah, it was good to know. Okay, right, let's get back to it. So pound New Zealand we've looked at, pound dollar we've looked at, pound Swiss we've looked at as well. I'm kind of positioned a bit too well. I don't have that much to talk to you about because I'm already in everything that I want to be in. New Zealand Swiss, Euro Swiss. I'll be honest, I think the thing right now is, yes, Euro Swiss and New Zealand dollar Swiss look fine. If you wanted to be short, it makes sense. But then my thought process is, why not just short pound Swiss instead? And you could either double the exposure if you wanted to take both of these, or obviously do whatever you want to do in that respect. But I just don't see a reason to be short Euro Swiss and New Zealand Swiss when pound Swiss is just a much better idea, in my opinion. So that's what I've got there. Platinum's getting a bearish reading. Silver seems to have dropped off as well. I know that silver, platinum, and maybe copper, I can't remember, but I know the metals were getting a more bearish reading. So let's take a look at silver and see if we're having any type of comeback. Doesn't seem like we are. A little bit of support found, but yeah, nothing really very interesting at all here. I think the only case where we can get silver and gold specifically to really start outperforming again and return back into their bullish dominance would be a complete de-escalation in the Middle East. Until we get that, I just don't see a world where we have these markets start doing well, unless we somehow had oil start flowing, inflation coming down, but the war was still there, and then we could catch not just the fall in yield appetite on the metals, but also then the risk off. That would be great. But yeah, I don't know. Just don't really have much on metals right now. I don't think it's worth being involved. Gold is holding on slightly. I mean, this could be a case where we sit here in 6 months' time and gold's back up here, and we're looking at this saying, oh, we should have, we could have just bought gold low, we could have, DCA'd in. But I just don't really want to do that yet. It's difficult because I really like the technicals, because again, we are coming into this daily 200 moving average yet again. We're currently in a daily fib level as well. So based on just technicals, it does look like we could get a bounce here. But yeah, as I said, it's just seeming a bit too fragile. I think it's not the best call at this time. Am I still on GBP/USD? I am, yeah. However, I'm considering cutting it for now, just because I'm already quite exposed to the sterling. So I'm pound dollar short, pound Swiss short, and pound New Zealand short. I don't want to be that exposed, because then one headline out of the UK is going to throw all 3 trades off. So it's just unneeded risk at the moment, and I'm not really, it's not really doing anything. So I might cut it. If we get a better entry or we get something going on, then yes. Fundamentally, I still think it's fine. It's not that I don't like the trade. I just think it's not, out of the 3, it's the one I'm not that bothered about. So pound dollar bearish, it's got a -8 score. So again, fundamentally, it is great. But yeah, it's just for my personal situation. So that's the rundown there. Technically speaking, I don't know, actually, let's put this back. Let's see about technicals. So weekly is still bullish. The daily technically is bullish, but I'm not overly convinced. We've got the triple lower highs, high, lower high, and lower high again. So I'm not going to take the daily moving averages overly serious at the moment. The H4 is technically bearish. But yeah, I'm just not seeing that much that's convincing me at the moment that we can get a better entry or anything. So yeah, kind of on the sidelines. Not on the sidelines, actually, but anyway, I'm rambling. Okay, so Nikkei, Euro, Aussie we discussed. It's not pound card, sorry. Australian dollar card we've discussed. I think the best trade that I'm not in at the moment is Euro Aussie. I think that might be the one to pay attention to. I think Aussie US dollar also could be great. We were discussing this one last week, and it basically falls into the same category. If we're getting the look at the AU 2-year. Yeah, I mean, what, am I missing something? Coming down, slight spike to the upside. I don't know, maybe I'm missing something here. So yeah, Australian US dollar. If we do get an unwind of the Australian dollar, I think it could be great. I did actually miss the entry here. I didn't manage to get in, but it pulled back to the 50% retracement, which again, we were looking at last week. So I do think it's worth paying attention here, especially if we do get the Fed to come a little bit more hawkish. I think it could be quite a nice trade to play on. So that is one idea. I've got 5 minutes left until we have Tiger coming to take over the show. So if you've got any requests, let me know. If not, I can keep going, just keep rambling about things. What else have we got? Canadian dollar. Yeah, I'm still on the sidelines with the Canadian dollar. I think the economy is really struggling. I've got a friend in Canada. They're really it's kind of like the way I feel about the UK. They're feeling the same about Canada as well. So no question in my mind that it's a bearish currency. The problem I've got with the Canadian dollar is just the oil exposure and headlines, and I just don't want to be involved. I mean, today is a perfect example. It's like, good news followed by bad news an hour later. It's like, I'm not gonna expose myself to that type of headache. So that's that. Pound yen is bearish still, which is interesting because I'm fairly sure dollar yen is back towards 160. Yeah, it is. It's creeping back. So what's pound yen doing then? I think pound yen could continue higher, to be perfectly honest with you. I don't like to take the opposite side of the edge finder, but we do have this left side that could do with a correction. We are still seeing bullish price action. We've got a bullish trend here as well. So I think based on the carry trade dynamic, the fact that we've got the BOJ hike priced in, or mainly priced in, I do think upside is still completely warranted. Again, I'm not going to place a position on that because I don't like to counter trade the edge finder, but that's just my personal opinion. On the bar chart, it's almost breaking 70-day support. How a bar chart? Have you got a separate website, or I'm assuming you can't do a bar chart on TradingView unless I've missed a trick. What's the website I use? Koifin. Koifin is pretty good for global yields as well, but I'm not sure if they do bar charts. I'm feeling like a boomer, so I can't find what the cool kids are talking about. Australian 2-year. But is there a bar chart is the question. I don't think there is. Oh, whatever. It's fine. I'll take your word for it, Sluggy. Oh, candles. Right. Okay. I thought you meant like an actual bar chart. All right, fine. Let's stick candles on then. Actually, hold on. Let me just make this more simple. AU02Y. What did you say it was doing? Breaking 70-day support. Crazy. Yeah, it is actually, isn't it? Yeah, well, that's the other thing. I mean, now we had the hawkish RBA. That's kind of done and over with. You know, we could still get a hike, but for now they're on pause. Yield has been rallying to the upside. We're now starting to break this level, as Sluggy said. So I think base case is the Australian yield comes down, and we can continue to see the AUD weaken on the back of that. So keeping it simple, straight and forward, straight and narrow, whatever that word is, or the saying. Anyway, Aussie New Zealand continuing to move to the downside, which is fantastic. Not really doing anything on the Nikkei. It's just sideways. Pound dollar still not doing anything. Pound Swiss is pulling back a little bit towards entry, and Pound New Zealand is rejecting off R1. Sorry, not R1, 1% level. So I think I might book the Pound New Zealand position, wait for a pullback, and then get back in at a slightly higher price. As I said, I do think this is going to correct. So I'm happy to take my profits down here just to get 1 hour out of the market. You know, no problem there. And then, yeah, I'll scale back in when we start hitting back into the high here. I think that's the most easy way to do it. Ladies and gentlemen, my time has come. Not to sound morbid, I will see you all tomorrow. Thank you for being here. We don't go anywhere. You've got Tiger coming to take over the show. Guys, stay safe. Don't get margin called, and enjoy the rest of your days.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Tiger here on to close out the show. Hope you're having a wonderful hump day so far. Getting some more headlines, some more back and forth today, of course, across the pond, out of Iranian state TV. Yet again, only for it to turn around and get debunked. Ladies and gents, once again, by the White House. Okay, we heard about the memorandum of understanding a little bit earlier in the day. Some red folder, events, some headlines, guys, where Iran was talking about some of the things on their draft, only for the White House to turn around and deny the reported MOU. So Nick said it perfectly in his video yesterday. Just another day of competing headlines. And today's no different. If it's a day that ends in Y right now, we're getting conflicting headlines. So we repeat ourselves over and over, but just be careful. Just be careful with the headlines, guys. Stick to the data, stick to the facts. That's what the top setups is for. It's what Edge Finder's for. And, take a lot of this stuff with a grain of salt, however I say that. So let me get my pop out chat over here so I can see you guys. As always, let me know, guys, if you have any specific tickers you'd like me to check out. Of course, you do have the Ola Prime code, just like the commercial said there, Nick, at the end, 35% off the account of your choice. A1 Live is the manual code, or you got your QR code up there as well. So a lot of cool things happening with Ola Prime. Nick was actually on Saturday with a panel of other speakers there, including Sam, who's one of my good friends there at Ola Prime. He was kind of moderating the discussion, but they've got a whole, I don't want to get too deep into it. I'm sure I'll probably get some more details from the team to pass along at some point, but they've come up with a pretty cool little club, if you will, for some of the top earners. So, again, not to get too deep into that, but they got a lot of really cool things happening over there. So definitely check them out. As always, guys, if you have any thoughts on that, let me know at Trade Like a Tiger on all the socials. So, but with that, what do we got going on today? Well, still got that pound dollar short. Just to take a quick look over here at my count. Still got that pound dollar short here. Of course, we did bounce into that overhead supply. You guys see I still got my stop loss up here above the daily. Take profit just ahead of the 4-hour. That's a 2-hour chart. So just ahead of the 4-hour zone. Meta still in the same spot over here. This is one of my 3 challenge accounts, guys. This is actually my Ola Prime account I have right here. So just like Marco was saying at the end there, if you guys have not tried Trade Locker yet, I'm telling you, and I know he can vouch for this as well, you got to check it out. You got to try out Trade Locker. That is one of the, I think Ola Prime is up to like 6 options now on platforms, 5 or 6. They've got 1 or 2 since I've even left. So, but by far above and away, Trade Locker is the absolute best, just as far as like the simplicity of getting in and out of your trades. And obviously they keep everything, kind of archived for you. So you can go to any of your trades, historical trades. So it's a really cool thing. But anyway, still just kind of sitting on my hands with this meta trade. Okay. As long as it stays above that zone, I'm good. What are we at? Like May 5th, Cinco de Mayo is when I got in that trade. So what are we up to? About 3 weeks at this point? I don't know if it's going to want to go up there or not, but you guys see where I got my take profit. Well, actually, I got my take profit just a little lower. So a little bit before that overhead supply. But anyway, get this update rolling, and we'll hop on over here to the charts and see what we got rolling. So I did just update my Edge Finder over here. Still got the Euro Aussie at the top along with the Nikkei, and that's about it as far as bullish items. Outside of if you're a currency futures trader, you got your US dollar up there, taking into account the really good technicals, the seasonality, along with some really good data that we've had come up of late. So that's still up there. We can take a look at that, take another look at some of these very bearish assets at the bottom as well. Let's see here, guys. So yeah, we did have Kiwi rates unchanged last night. I think they already went over that. The gentleman did just a little bit ago, as far as keeping their rates unchanged. Pretty much the same story. I mean, if I just pull up my notes I wrote down here from that, let's go find it. Bitcoin, let's see, where did I put those notes? I put them here somewhere. But anyway, same picture. Okay, a little bit of dissension on there. Pretty much a hawkish hold, if you will. Talk about the Kiwi. And just looking at the strength of the Kiwi, remember, it's actually at the top. It's at the top right now, tied with the Swissy as far as fundamental strength. So exceeding expectations on quite a bit of its reporting. Just to dig a little deeper onto the Kiwi, since that was the rate release. Yeah, we've really only had one report come out in the last 7 calendar days. It's going to be the retail sales number that came out bullish. You do have one really old report. That's obviously going to be your quarterly GDP report. Last one we got was way back in March. So April, May, June. So yeah, we should be getting that here within the next month to see if we have any changes on that front there. But it was a pretty dismal one, the previous one, where they had a 0.9% all the way down to 0.2%. Just blitzed right through the forecast. So again, this is pretty much an aged report, but here in another 3 weeks or so, we'll get a new report for the Kiwi. And then the PMI data, that was the middle of May. That was a bearish report. But other than that, looking pretty good. looking pretty good, guys and gals, on the Kiwi front. So definitely interested to, especially in something like the pound Kiwi, which is at the very bottom. So pound weakness. Remember, the pound went from 100% all the way down to what are we at now? All the way down to like 30-something%, I think it was. Eco surprise meter. Yeah, 33%. So it's not a surprise at all to still see the pound Kiwi on here, selling the pound weakness and buying the Kiwi strength. So let's go take a look at that. Be interested to see what we got over here. I don't even think I have an alert on there, do I? No, I don't have an alert. So let's go create an alert or see why I didn't put an alert. There's probably a reason I didn't put an alert over here. Okay, get a daily on the right. So this is part of the issue right here. We still have not really gotten a clear picture on the EMAs. Talking about the red, which is my 8. Still technically above the 21. Yeah, that's the picture I don't want to see. Now, looks like it's close to flipping bearish as far as the 8 EMA, but as of right now, it's above. Now, when this candle closes, so long as it closes down in this area, it's probably going to flip. Okay, by the time the next candle opens. But are we in a little bit of support? Are we in a little bit of demand here at the bottom? Well, I've got the only thing I had drawn up, and at this point, I'll go ahead and move over to a 1-chart look. It had a little bit of a demand here with some pretty strong VSA activity, the yellow candle down here at the bottom, on not only the basing candle, but also on the leg out candle. Okay. My absolute necessity when I buy a zone or sell a zone is the leg out candle has to be where it has to have that, higher volume, the higher trading activity. The basing as well, but I prefer the leg out because on the way out is where the price moved too fast for potentially those institutions and those banks to fulfill their order. So again, as always, we just wait for the retracement on this. Now we're looking to short this, so it's no surprise that it's just kind of cutting right through this zone of demand. Okay, bearish everything, trend pretty bearish, even though we just saw the 8 and the 21. EMAs aren't really helping us out on the mechanical side of that trend. And it's really kind of congestion-y as well. If we just take a look at that daily, it is giving us lower lows and lower highs, but this is just big ranged candles. It's kind of a mess, to be honest with you. So what I think I'd want to see if I were to try to short this thing is because before I get to that point, 4 hours. Yeah, I mean, we do have a 4-hour zone down here, but I'm not really excited about it as far as it affecting anything because there's not really like ultra high volume coming out of that as far as a leg out. It did break this kind of minor structure here, but it didn't really break through here. A supply zone ended up kind of stopping its tracks temporarily. So I think the end result on this, if I just go back to the daily, I would really like to see this daily supply come into fruition at some point or come into importance. But I honestly think if the highest probability would be to break through the rest of this nonsense here, break this structure, and then retrace to the supply. Now, that may take a while, may not happen overnight, but so long as we keep this bearish of a look, -10, a little longer term, if we can hold on to that bearish rating, I'd like that. Because we would still be maintaining our lower lows, our lower highs. Obviously, this would be a new lower low, just kind of projecting out. And then just get a simple retracement. You got a beautiful looking daily supply zone right there. What about on a 4-hour? Can I get any decent confluence? Yeah, I got to say, guys, I don't really like the picture of the volume. That's kind of the downfall if I'm looking at this on a 4-hour. It's just not really painting a pretty picture down here. So I don't know how much underlying strength is here when it comes to the volume. I don't know if effort is really matching result, just kind of going back to Wyckoff, but at least it's breaking some structures along the way. And ultimately, that's basically what I'm gonna stick with, guys. I really want to see this continue and close below this structure first. For me personally, if it breaks that and then retraces, all right, then we got a little bit of a ball game. But it's got to jump through my hoops. Okay, I don't want to get in this thing prematurely because when you look at this thing on a 4-hour chart, this whole thing is just kind of a mess, in my opinion. So Yep, I think that's what I'm going to stick with. It's got to jump through some hoops, ladies and gents. CAD Swiss, Pound Swiss. Yeah, we kind of went over those yesterday. I don't think it's really moved a whole lot. Well, let me see here. Okay, so my daily is okay. EMAs are in sync. And I've got to break a structure here. So by definition, what do I have? Got an impulse leg, a bearish impulse leg to the downside because it broke this structure right here on the left. Okay. I don't know what, yeah, okay. It actually broke another structure that I had drawn up. So there's got to be some underlying strength in this zone somewhere. Okay. So again, and I got a lot of colors on here. So sorry if this looks a bit of a mess at this point. Let me just get this old zone out of the way since we know it's already worked. This zone is still in progress because it hasn't been touched yet. So just kind of going to the origin of this down move, basically looking at this red candle here with a gap that's come out of it. And again, continued and broke structure and closed. Double bottom, actually. Okay. So it didn't close on a daily, but it did close on that 4 hour we just looked at. So within this supply zone, this daily supply, which again is my yellow rectangle, where are my supply zones or my smaller time frames? Got a 4 hour here, got a 4 hour here. So that's a zone on top of a zone, right? Zones on top of each other are pretty good confluences in their own right. I just get the daily out of the way for a second. Okay, 4 hour, leg out candle has some pretty strong volume spread analysis activity. That's pretty, guys. That's the true origin of this strong down move, this impulse leg. So I would think that would be the highest probability, but I would probably want to take advantage of the bottom one because it itself looks pretty decently strong. And it's basically the daily zone. So I think rather than waiting for this supply, this would probably be kind of like kind of like a dollar cost average in type of an idea. Perhaps you could take one position right here, and obviously you got a buy to cover point because you got a demand zone just screaming at you saying, hey, if we get down here, you may want to consider buying to cover, take your profits ahead of time before you bounce into this zone here. And then maybe a second position, would be if we chew through the rest of this supply, we got another potential opportunity up here. Okay. So option A, you can, this would be a spot to short. And if you wanted to be ultra conservative, you don't even worry about the second zone. You just you put your stop loss somewhere up in this area. Okay. Above the whole thing like this. So stop loss regardless, really. If you wanted to be really aggressive, put your take profit or your stop loss ahead of the bottom zone. I wouldn't do that because we can't ignore this zone here. Again, zone on top of a zone. So I think regardless, your line in the sand would want to be up here. And yeah, if you wanted to just play, one order here, or if you wanted to put a second order. So maybe half an order here, half an order here to get your full order, whatever your risk percentage is, cut it in a couple pieces because it may catch this first zone and just completely drop. But I wouldn't put a ton of money on it. I would put more money on the zone higher up. Again, it's the closest to the origin. And also keep in mind, there's an inefficiency in the market right here. There's a gap. So there's your gap on the top zone right here. And then here's your gap on the bottom zone. Your runaway gap, your fair value gap. Okay. So there's a couple gaps showing where supply heavily exceeded demand. So looking pretty good. I like that. I like that a lot. That's going to be my number one setup. I've got my alert at 57.20. So we can see what happens when it starts bouncing into that area. Euro back down as expected, says digital content. Yeah. Yep. Euro has definitely gotten a little weaker fundamentally. Remember, it was tied with the pound at 100% a while back, as recently as May 20th. So last week, last hump day, we were still at 100%. And then for the weakness side of it, argument, look at that. We've had a couple bearish reports in the last 7 calendar days. Okay. Last Thursday, is that right? Yeah. Both sectors of your purchasing managers indices came in bad. The manufacturing is still in expansionary territory, but not the services. This thing has dropped even further into contractionary territory. Again, under that 50% baseline, whatever you want to call it. That's basically where contractionary territory starts, under 50, anything under 50. So you already had a not so good report. They actually projected it to go up, but it went down, and it went down substantially, 1.2 points down from the previous. So not a good look. So yeah, euro not looking the greatest. What's euro dollar look like? Okay, there's euro dollar. I want to see the daily real quick. Okay, so 8 EMA below 21 EMA. So the alligator's mouth opening to the bottom side. Okay, that's kind of confirming your downtrend. Broken structures here, lower lows, lower highs, but there may be a little bit of saving grace for the euro because we are getting close to a daily demand. We're not that far away at all. About 50 pips or so, 45, 50 pips or so from here to here. So it wouldn't surprise me in the least little bit to see if we get some type of, continued drop, bounce in and get a retracement up. Now, this retracement up would go a lot further up if we get some dried ink on a deal between Iran and U.S. But as long as we keep dilly-dallying and getting mixed headlines, hot and cold, positive to negative, then it's not going to surprise me at all to see a little bit more dollar strength continue. Again, money likes to flow into the dollar. It's a safe haven amidst all this chaos and wackiness, right? So if they continue fighting and cussing and discussing with each other, yeah, we could see a continued drop, which is what I want to see because pound dollar is the trade I'm in. Now, as always, guys, the first and foremost thing I want in this world is peace. So I would be more than happy for them to shake hands, kiss and hug and make up and write a deal. Because if that happens, what's going to happen to my trade? Probably going to get some pushes back up, right? Money's going to flow out of the dollar into risk assets and, potentially be negative towards my trade. I'm okay with that. But so long as we keep getting these back and forth headlines, I'm sticking with my short. Yesterday they mentioned yesterday the Iranian, I think it was Iranian state TV, that the U.S. or the Navy was starting to escort ships. Or it was reported on the Wall Street Journal, of all people, had mentioned that we were starting to escort ships, escort tankers and vessels through. And then what happens? CENTCOM comes out an hour later and says, no, we ain't. Okay. Positive to negative, positive to negative. So long as we keep that formula, I'm staying short on this thing. I've got to take profit down here anyway. I'm going to let it do its thing. Obviously, pound dollar is giving us a bearish -5. Ooh, it's actually gotten a little bit stronger too. So let's go look at that. I want to see pound dollar. I want to look at pound dollar real quick because I think we were at minus. Where's pound dollar? There you go. Okay, so see, it still shows -8 over here. Look at this. So when I got in the trade, when I got in the short, it was, -7, -8. Pound dollar, -5. So it's gotten a little stronger. A little bit stronger. But just because it's getting stronger, I'm sticking with my guns on this. Until I see Marco Rubio or President Trump get on and give us a update and say, yeah, we got a deal, I'm sticking with it. Now, tomorrow is the cabinet meeting. Okay, the U.S. cabinet meeting. They were going to have it at Camp David. I think they said they were going to move it back to the White House due to inclement weather. So I'm at least holding on to my trade through there. Now, if he gets on, and if they get on tomorrow and say something's positive and this is going the right way, then again, I think my trade's in trouble. So I'm going to be very in tune to what they say tomorrow. You can actually watch their cabinet meetings on YouTube for free, guys. If you want to start drooling and watching paint dry and that kind of thing. I usually do it just because I'm at home on my computer all day anyway. Sometimes it can get boring, but it can actually be pretty eye-opening just listening to some of their conversations. So, that's what I'll be doing, especially because of my trade. Dixie in a box, says Andrea. Yeah, pretty much is. Since Sunday, a week and a half ago, basically at this point. Dixie in the box. There's your box. Where's it going? Okay, we started getting some rather positive headlines about this time last week. Only for it to get refuted. Only for more positive to come out. Refute, positive, refute. So yeah, we've been stuck in a box. You're exactly right. Now, dollar strong overall. We did break this structure over here. Didn't really get much. We got a little bit of a close, I guess, on this 4-hour time frame. But yeah, look, if we get confirmation from the president or Secretary Rubio that we've got a deal going on, okay, a deal actually they're about to go write it up or go sign it. This is what dollar's going to be doing. It's going to be dropping. If they continue cussing and discussing and fighting, it's going to continue rising. But right now, we're in decision because you guys are all seeing the same headlines we are. It's hard to make heads or tails of it when they just constantly are refuting each other. So that's why we're in that box, right? Going up, yeah, going up. We would like to see it going down. If dollar's going down, that means they probably got some actual deal in progress rather than flapping their lips and jaw jacking. They just get it over with. So gold, I did want to take a quick peek at gold while I'm here because I did write up, I did have a trade opportunity this morning. I don't know. Okay. So yeah, with gold getting us a bearish signal, obviously I've kind of touched on this zone up here that kind of started this whole down move thing. I was looking a little more intraday down here. Yeah. See, I was keeping an eye on this 5-minute zone. Even on 5 minutes, guys, I'm telling you, this stuff works pretty well. Nothing is 100%, not even supply and demand. But look, we had a 5-minute basing action. We had a strong leg out, broke a previous support resistance on ultra high volume. That's why we have a red candle down here. Okay. Red candle. That was that leg out. Even on an intraday, short-term intraday style strategy, guys, this stuff works pretty well. Look at that. We wicked into the supply, and I had drawn up this demand down here as a take profit. That took no time. That took no time at all. So the trade's over with. Nothing I can do about it now, but that was another good trade opportunity right there. Even on a 5-minute chart. Now this was aided a little bit by some of those initial headlines that came out of Iran state TV. But again, what happens? We come back and say, nah, White House, get that push back up. So it's just ebbing and flowing based off of headlines right now, guys. Because data this week, pretty thin. Okay, tomorrow we do get the personal consumption expenditure numbers coming out as well as the gross domestic product. This is more of the preliminary number, so it's not the final. But yeah, these are going to be some pretty big events coming in tomorrow. This is the first for the U.S. this week, not till Thursday. Okay. What else we got? PCE. Got our normal unemployment claims where they're projecting 2,000 higher claims this week. That would not be a good look. But I think the previous one was a bearish one as well, wasn't it? Jobless claims. No, that was a bullish. Okay. So, yeah, that would flip this box. So we could see the dollar go even more negative. Now, we don't have PC on this box here, but about the closest thing we have would be CPI, where they did have some bullish reporting the last time as far as the inflation, CPI, PPI. Oh, PCE is right there. Duh, Tiger. I was going to say I didn't see it initially. So the previous PCE was neutral. And tomorrow we are expected to remain the same. So there you go. So yeah, that's gonna tell us a lot. These reports are going to tell us a lot if we are going to go above 50% or below 50%. Are we going to get a little more dollar fundamental strength, or are we going to get a little more weakness? So definitely be on the lookout for that. Pound Kiwi, we looked at that. CAD Swiss, Pound Swiss. Yeah, the CAD Swiss one. Actually, you know what? I actually made up a couple alerts here yesterday. Kiwi. Okay, so here was a zone I drew up that failed. Okay, I didn't take this trade, but this was one zone I drew up yesterday, and this is why, guys. This is Kiwi Swiss. Let me introduce you to Kiwi Swiss. This thing is full of wicks, full of big ranges within candles to where you get this sloppy look. It's hard to make heads or tails out of stuff like this. Look at that. Does that look like clean price action to you? Okay. You got to be careful with stuff like this. Okay, some of these currency pairs, Kiwi Swiss among them, pound Swiss a little bit as well, they're not clean at all. It's not like looking at a euro dollar where you see trends a little more clean. So, yeah, I don't even think I've traded Kiwi Swiss, to be quite honest with you, but a handful of times in my life. This is why, because you get this kind of nonsense. So there's your daily look. And what did I draw up? I drew up a 4-hour zone here. So the 4-hour zone looked okay, but initially I knew it was not going to look great because of the volume. And again, Kiwi Swiss was giving us, I think it was giving us a bearish look at one point. It might have fallen off, but nevertheless, yeah, that was a short-lived idea. I didn't take advantage of it because did not get any kind of candles that acted like it was trying to roll over. So just let that one fly. So goodbye. What else did I have? Netflix. I know we're now looking at a stock here, but yeah, got a Netflix zone that's kind of worked out a little bit. Looking for a retracement on this. Okay, at this point, kind of broken structure here and closed. So now possibly a second chance opportunity if we drill down to, there we go, 30-minute. Look at that 30-minute zone. Look at the leg out. What's the volume look like? The VSA activity. Right here on the leg out. It's a pretty good look. So I'm going to keep an eye on this one, guys. Just kind of, showing you some ideas from Stockland over here, Netflix. And I know that Netflix, after looking at the stock box last night, is given a pretty bullish signal. So that'll be another one I'm keeping an eye on. See gold, silver, Google, dollar Swiss. What else did I have over here? And it's almost time already. Dollar Swiss, I am keeping an eye on if we happen to get any help from the Edge Finder, which currently we are not. Because I did have a daily. Oh, you know what? Actually, that's a wash. That's already taken place. I need to delete that. Yeah. I don't really have a whole lot to add today, guys, except for just the fact I'm going to continue monitoring my pound dollar and seeing how tomorrow's cabinet meeting goes. Again, I think that's going to go a long ways into giving us a little more clarity. Some people you listen to say, Iran is more accurate. Some people say the U.S. is more accurate. Who the heck knows? That's why at this point we need something dry. We need some dry ink. We need a deal. Okay, that way we can have a little more clarity. So it's very challenging in these times, placing a lot of these trades. But hey, at the end of the day, it makes us stronger. So that when the good times are flowing, we got deals, we got a little more peace in the world. We can focus just on our data. Then we can look back and say, oh yeah, we made it through that period. So let's embrace the period we're in right now. Okay, it's definitely adding a lot of scar tissue to some people. And it's adding muscle to a lot of people. So, hey, we'll get through this. But that's about all I got, ladies and gents. Have a wonderful day, and I'll be back tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.